Hi there, and welcome to the Byline, where we discuss the strategies and technologies that are transforming business finance management. I'm Chris, and today I'm talking about a problem that nearly every finance and operations leader has felt: the disconnect between the team that buys things and the team that pays for them. If the procurement team makes a purchase, they need to pass it to the AP team to pay the vendor. But in most companies, there's no clean handoff. Accounts payable gets an invoice out of the blue and has to scramble, asking, "Who bought this? Was it approved? What budget does this come out of?" This chaos is holding your business back. It leads to manual data entry, budget overruns, late payments, and a complete lack of real time visibility into your company's financial health. The solution is to stop thinking of procurement and AP as two separate functions and start treating them as two halves of a single, unified process: purchase to pay. Today, we're going to explore how to do just that. We'll cover why this integration is so vital, what to look for in tools that promise to connect these functions, and a simple framework for planning your own integration strategy. So let's start with the big question: why should a busy finance leader even prioritize integrating procurement and AP? The first and most obvious benefit is the elimination of manual work. I've spoken with so many accounts payable managers who say their team spends the majority of its time just rekeying data from a purchase order into an accounting system or from an invoice into a payment platform. It's redundant, mind numbing work. But when these systems are integrated within a procure to pay platform like order.co, that data flows seamlessly. An approved purchase order automatically becomes the foundation for the bill payment, which frees up your team for more valuable activities like cash flow analysis or vendor negotiations. The second benefit is a massive leap in data accuracy. Every time a human has to manually type something, there's a chance for error. A typo in a dollar amount, a wrong GL code. These small mistakes can take hours, sometimes days, to track down and fix. Automation removes that risk. The data is entered once at the beginning of the process and then flows through the entire workflow untouched, ensuring what was ordered is exactly what gets paid. Third, and perhaps most important, is gaining real time financial oversight. In a disconnected system, you don't really know your liabilities until an invoice physically arrives. You might have thousands or even hundreds of thousands of dollars in commitments out there that haven't hit your books yet. An integrated system gives you a clear view of your financial commitments the moment a purchase is approved. This is a game changer for accurate cash flow forecasting and budget management. The fourth benefit is spend control. It's far more effective to enforce spending policies at the point of purchase, not weeks later when you're staring at an invoice for something you never would have approved. Integration allows you to build your budgets and approval rules directly into the purchasing process. A request for a $10,000 software subscription can be automatically routed to the CFO, while a request for office supplies under $50 can be auto-approved. This stops Maverick spending before it even starts. And finally, all of this culminates in a much faster month-end close. The close process is often difficult, precisely because of the time spent matching invoices to POs and receipts. With an integrated system, all that purchasing data is already captured, coded, and synced to your general ledger throughout the month. The reconciliation process becomes exponentially faster and more accurate. Okay, so we've established the why. Now let's talk about the how. What should you actually look for in procurement and AP integration tools? It's tempting to think you can just buy an AP automation tool and call it a day, but that's treating a symptom, not the root cause. The root cause is the uncontrolled way that purchases are made in the first place. So, the first thing to look for is a unified platform approach. Avoid the temptation to bolt together a collection of separate tools for e-procurement, AP automation, and vendor management. That just perpetuates the data silos you're trying to escape. A superior solution manages the entire process from requisition to reconciliation in one single system. Next, you need to scrutinize the quality of the accounting and ERP integration. Any decent tool will say it integrates with NetSuite or QuickBooks. But how deep does that integration go? A weak integration might just dump purchase order data into your ERP, creating more work for your accounting team. A truly powerful integration syncs clean, pre-coded, and approved invoice data to your ERP to simplify the entire reconciliation process. Your tool also needs to have robust, automated approval and coding workflows. This is where you bake your financial controls right into the system. You should be able to build multi-step approval chains based on any factor you want, like dollar amount, department, location, GL code, you name it. And the platform should ensure every purchase is coded at the requisition stage, so accounts payable never has to guess which budget an expense belongs to. Lastly, look for centralized vendor management. How many hours are wasted managing vendor information, catalogs, and contracts in spreadsheets and email folders? A great tool brings all of that into one place to simplify purchasing for your employees and make life easier for AP. Now, let's wrap up with how to actually plan your integration strategy. This doesn't have to be a massive, year-long project. For most mid-market companies, you can approach this in 5 clear steps. Step 1. Map your current purchase-to-pay process. Get a whiteboard and draw out every single step, from how an employee requests an item to how the vendor gets paid. Note the people, the systems, and the time it takes. Step 2. Identify your biggest pain points. Be honest. Is it out of control spending? A backlog of unpaid invoices? Frustrated employees who can't buy what they need? Pinpoint your top 2 or 3 challenges. Step 3. Define clear, measurable goals. Don't just say you want to be more efficient. These should be specific, like reduce invoice processing costs by 50% or achieve 95% spend under management within 6 months. Step 4. Evaluate solutions against your goals. This is key. Don't get wowed by flashy demos. If your primary goal is to eliminate rogue spend, a tool that only focuses on paying invoices isn't the right fit. You need a platform that provides that upfront pre-purchase spend control. And step 5, prioritize user adoption. The most powerful platform is worthless if your team won't use it. Look for a solution with an intuitive interface that makes buying things easier for your employees, not harder. So let's recap. The disconnect between procurement and accounts payable is a major source of operational drag. But integrating these functions with a unified platform helps eliminate manual work, increase data accuracy, gain real-time visibility, enforce spend controls, and dramatically speed up your month-end close. When you're looking for a tool, prioritize a unified platform with ERP integration and automated workflows, like Order.co. This is how you unify your entire purchase-to-pay lifecycle. Thanks for tuning in. To learn more about how you can simplify buying and automate payments for your organization, follow the Buy line to get notified when new episodes are released. See you next time.